Thanks so much, John. That's right. I'm joined now by Snap CEO Evan Spiegel here in Cannes in front of this amazing augmented reality exhibit that you have here showing off some of your coolest technology. But before we talk about all of this, Evan, we have to talk about what comments you made, the comments that you made that brought Snap shares way down in your last public appearance, really. And there were comments that were really warning about a continuing declining growth rate. Here at Cannes, the vibe seems pretty optimistic, but tell us what your outlook is right now.
Hey, Julia, it's great to be together, and especially here in the south of France. Yeah, when we issued our earnings guidance, we said that we expected our growth rate to decline and to decelerate, but it happened further and faster than we expected. So I was scheduled to appear at an investor conference, and I could probably either pull out at the last minute, or if I was going to speak with our investors, I just wanted to be direct and open with them because that's really important for building trust over the long term. And so we shared that deterioration happened further and faster than we expected, but our business continues to grow and we're continuing to invest. We're certainly excited about the product roadmap, and you're right, the energy here is infectious. I think people are just so happy to be back together after a couple years.
People are happy to be back together, but there is this question about the macro environment and how much inflation is impacting consumers and whether there's going to be a recession. What's your sense of that and how much those factors are going to impact your revenue growth going forward?
Certainly, I think people are concerned about the macro. It's probably to be expected because between fiscal policy and monetary policy, the government's response to the pandemic was, I think, double what we saw in the financial crisis. So I think the government response has been enormous, and inflation, I think, was to be expected. So what you're seeing is sort of on the one hand, businesses that are really focused on growing earnings, seeing rising input costs, right? Things like labor are getting more expensive, and so that's putting pressure on their bottom line. And then you're seeing growth companies that are really thinking about building their business over the long term. The value of that incremental customer a few years out is lower now because interest rates are higher. So those earnings get discounted at a higher rate.
And so what does all of this mean, though, for Snap and the Snap-specific issues? You've talked in recent quarters about challenges navigating Apple's operating system changes. They're expected to make more. You have Google and the EU and all sorts of different changes and potential headwinds to ad targeting. What does that mean for Snap and for your advertisers?
Well, I think in an environment where input costs are increasing, what becomes really, really important is performance, right? So you want to know that every dollar you're spending is growing your business at the highest possible rate. And that's why digital advertising is so important. And I think that ties back to what you're hearing here. People are so focused on making sure that as an industry we can navigate these changes because digital advertising is critical to the way that people are building their businesses.
But so what's your message to investors? I mean, we were talking right before our interview about how Snap shares are way off their highs, and you detailed very transparently how much the growth rate in revenue is slowing down. But what do you think investors should know right now with Snap way off its highs?
Well, I think taking a step back, this is the third time our stock's been in the teens in the last 5 years. And over that period of time, we've grown our revenue more than 5x. I think our community has nearly doubled. So we just stay focused on the long term. And of course, markets are volatile. That's to be expected. And I think what's so exciting is that we just continue to strengthen our lead in augmented reality, which is going to be so important to the growth of our business going forward. So we'll navigate these changes. We're focused on the long term. And that's what we've been doing, in the 10 plus years we've been a business.
So tell us why augmented reality is going to have such a direct impact on advertising revenue or on potentially other revenue streams.
Well, I think, for example, if you look at young people, about a third of their discretionary spend today goes to fashion, accessory, beauties. And all of those different categories, can see amazing results with augmented reality because it allows people to try those products from the comfort of their home and without changing their clothes. So it's really a new way for consumers to shop and be able to see what they look like in different products, and that of course lifts conversion rates and also reduces returns. So it's great for the merchant's bottom line. It's of course better for the consumer, better for the environment overall as well. And so AR is just playing a transformational role in retail itself.
And so those AR tools will enable advertisers or encourage advertisers to spend more. Or do you see an additional revenue cut perhaps from commerce on the platform?
Right now we're focused on just onboarding merchants using our AR tools, and in fact we've packaged up our AR technology into something called Camera Kit so that people can put it in their own applications and websites. And then if they want to reach a larger audience with their AR experiences, they can distribute it on Snapchat because there are over 250 million people that engage with AR every single day on Snapchat. So the way that we're growing the AR business right now is just by helping people distribute those AR experiences to our audience and offering them tools to bring AR into their own applications and websites.